Real estate, the gold standard of wealth, the vehicle behind millions of millionaires. But where do you begin? If you've ever wondered how to start investing in real estate but felt overwhelmed by cash, credit, or complexity, this video is for you. We're going to walk you step by step through the entire process of real estate investing, from mindset and strategy to financing, taxes, and even property management. Whether you're broke or banked, you can start today. Smash the like button if you're serious about passive income. Subscribe for weekly finance deep dives. Question of the day: what scares you most about real estate investing? Drop it in the comments. Let's start with one undeniable fact. 90% of millionaires build wealth through real estate. Not stocks, not crypto, real, tangible property. 5 reasons real estate is so powerful. Number 1 is leverage. Borrow money to buy assets. With 20% down, you control 100% of the asset. Number 2 is cash flow. Monthly rent checks equal to passive income. Number 3 is appreciation. Property value increases over time. Number 4 is tax advantages. Depreciation, 1031 exchanges, mortgage interest deductions. Number 5 is inflation hedge. As inflation rises, so do rents and property values. Compare that to stocks, where you can't use leverage without risk, no cash flow, and you're taxed on gains. But both have value. Time is money. To maximize your gain, you can use Chime, SoFi, Robinhood, or Fidelity for fractional stock investing while you stack for your down payment. Set up a high-yield savings account with Chime or SoFi to start your real estate fund. Now, let's talk about your options. Not all real estate is the same. There are 4 different options you can choose from. Option number 1, residential real estate. It includes single-family homes, duplexes, triplexes, and fourplexes, Airbnb, and vacation rentals. These offer easier entry points and more predictable financing. Option number 2, commercial real estate. It includes apartment buildings, 5+ units, office buildings, warehouses, or industrial parks. These offer more money and more return, but come with greater complexity. Option number 3, REITs, real estate investment trusts. This includes buying and selling shares of real estate portfolios. They offer easier entry point, less upfront costs, and simplicity. You can start investing in REITs with as little as $1 via Fidelity or Robinhood. Option number 4, real estate syndications and crowdfunding. It includes pooling money with others to buy larger deals. This offers great passive investment for busy professionals with legal protection. Question is, what's best for you? Well, that depends on your time, money, credit, and risk tolerance. Comment below. Would you rather own a duplex or invest passively in a syndication? Before we talk about buying property, we need to talk about how investors think. Investors don't look for their dream house. They look for cash flow. Investors don't panic about repairs. They budget for them. Investors don't buy emotionally. They buy with spreadsheets. Here's the mental model. Homeowner buys based on emotion, lives in the property, wants perfect condition, and focuses on style. Investor buys based on numbers, rents it out, sees potential value, and focuses on ROI. The shift is this: you are not buying a home. You are buying a business. Use a real estate calculator, run the numbers, get familiar with terms like cap rate, cash-on-cash return, NOI, and debt service. Here's the good news. You don't need to be rich to invest in real estate, but you do need a plan. Now, let's look at the entry costs. Down payment is typically between 3.5% to 20%. Closing costs is between 2% to 5%. Repairs and reserves require 10% of your total budget. Emergency fund should be 3 to 6 months of expenses. To put this into perspective, for a $200,000 property, you might only need $15,000 to $30,000 to get started. Use SoFi for down payment loans or personal loans. Use Chime for automatic savings. Use Fidelity to invest short-term cash in T-bills. Let me know in the comments. How much are you saving toward your first deal? Financing is the fuel of your real estate empire. Popular loan options include: number 1, FHA loans, 3.5% down, great for house hacking. Number 2, conventional loans, 5 to 20% down. Number 3, VA loans, 0% down for veterans. Number 4. DSCR loans, based on income from property. Number 5. Hard money, short-term, fast approval, high interest. But what do the lenders care about? Well, they care about credit score, DTI ratio, income history, and property condition. Use SoFi to check your credit score for free. Use Chime to track banking activity. Use H&R Block or TurboTax to clean up your tax returns for your loan approval. Get pre-approved, know your buying power, then strike when the deal is right. You make money in real estate when you buy, not when you sell. Now, where to find deals? Check out Zillow, Redfin, Realtor.com. Wholesalers and off-market deals. Facebook groups and Craigslist. Driving for dollars. Auction sites like Hubzu. Run the numbers before you visit. Your formula is cash-on-cash return equals to annual net cash flow divided by total investment times 100. Set up alerts, make offers often, and don't chase perfection. Chase profitability. What market are you targeting? Drop your city in the comments and find investor friends. You think you found a great deal? Here's how to close it like a pro. Work with an investor-friendly real estate agent. Submit your offer with contingencies such as inspection and financing. Get a home inspection. Negotiate repairs or credits. Finalize your loan and sign at closing. Congratulations! You're a property owner. Now the real work begins. To build wealth, you need systems. To manage your rental, you can choose to DIY. This will save money, but more time-consuming. Or hire a property manager, 10% of rent, hands-off. Or use tools like Avail, Rent Ready, or Appfolio. Other things you need to do are screening tenants. This includes background check, credit score, income verification. Setting expectations such as clear lease, late fees, pet rules. Automating payments using online rent collection via ACH or Zelle. Your goal is to create a stress-free system that runs without you. Use Keeper Tax to find write-offs you didn't know about. Use TurboTax or H&R Block to file accurate landlord returns. Real estate has the best tax benefits in the entire U.S. tax code. Key strategies include: Number 1. Depreciation to reduce taxable income. Number 2. Mortgage interest deduction. Number 3. 1031 exchange, sell and reinvest tax-free. Number 4. Cost segregation. Number 5. Home office deductions. And number 6. Repairs versus improvements. Have you ever taken depreciation before? Let's hear your experience in the comments. Your first property is just the beginning. Now it's time to scale. Strategies to expand include BRRRR method: buy, rehab, rent, refinance, repeat. House hacking: live in one unit, rent the rest. HELOCs: tap equity from your first deal. Partners and syndications: scale with others' capital. Focus on repeatable systems. Every property should build momentum. What's your next move? BRRRR, Airbnb, or multifamily? Let's brainstorm in the comments. Real estate is not just about money. It's about freedom, autonomy, generational wealth. No matter where you're starting, broke or bankrolled, you can make this happen. In addition to growing your real estate portfolio, remember that education is a lifelong journey in this field. Attend local real estate meetups, webinars, and workshops to connect with other investors. Leverage social media platforms to learn from industry experts and share experiences with peers. Subscribe to informative blogs or podcasts that discuss market trends and investment strategies. The more knowledge you gather, the more confident you'll become in your investment decisions. Embrace a mindset of continuous growth and stay vigilant in the ever-evolving real estate landscape. Always seek opportunities that challenge you and further your understanding. Stay organized by creating a detailed real estate investment plan that outlines your goals, criteria, and timelines. Identify your ideal property type, preferred neighborhoods, and investment strategies that align with your financial objectives. Set measurable milestones to track your progress toward your first investment, whether it's saving for a down payment or gaining knowledge through research. Regularly review and adjust your plan as needed to remain focused on your investment goals, ensuring that you adapt to market changes and seize new opportunities when they arise. If you got value from this video, don't forget to give it a thumbs up and subscribe for more content just like this. Got questions or thoughts? Drop them in the comments. I read every one. And if you're serious about leveling up your finances, check out the links in the description for tools and resources I personally recommend. Until next time, keep learning, keep building, and take control of your financial future.